There are traps everywhere in crypto. This can be small, like paying too much in gas fees, or as large as losing your entire account. But the good news is these are totally avoidable.
To help, here's my friend Dan.
What the am I supposed to say? And I'm here to help.
I'm going to quiz him on every crypto trap for every question he gets right. The more money I'm going to donate. If he gets everything right, we're going to donate $1,000. To warm up for $5, who is the founder of Ethereum?
Vitalik Buterin.
That's correct.
Better not get harder.
The crypto space is full of hackers, and not all of them are going to have good intentions, like that one guy who stole $600 million and then gave it all back. I mean, there's nothing more appealing to a hacker than stealing money that can't be tracked. One of the most simple yet effective measures to take in preventing your account from getting hacked is called 2FA. Every exchange has it, and you're at risk if you're not using it. If you don't know what 2FA is, it's a type of security that requires two forms of identifying yourself before giving you access to your account. This is most commonly built as a text message code, but even that isn't perfect. So I would highly recommend getting set up with an authenticator app like Google Authenticator. These apps produce a new code every few seconds that you then enter into the site that you're logging into. If you have this set up, the only way someone can get into your account is if they have both your password and physically have your phone. And let's be honest, if someone has both of those things, you have bigger fish to fry.
For $10, what does 2FA stand for?
Two-factor authentication.
We'll take it.
2FA?
Second, fat.
Second, fat.
Now you're safely logged into your account, but you're still not totally safe from yourself. That's because you don't have a goal or a plan. A goal is the reason why you're investing in crypto. Is your goal to invest in promising projects to hopefully gain a good return on your money in the long term? Or maybe your goal is to YOLO 5K into meme coins just because a TikTok told you to. Whatever your goal is, you should establish that in advance because this helps you make a logical investing plan. Let's say your goal is to build that portfolio long term. One way to meet that goal would be to buy $100 in Ethereum and Bitcoin every week. And then on top of this, your plan could say if crypto drops 30% in a single day, you won't sell, and instead you'll triple your buy that week to $300. Here's the thing to remember. No plan is the perfect plan because we don't know what the future will hold. What's important is to set yourself guidelines. Humans, me included, I'm bad about this. If there's gray area, we will make the emotional choice when the time comes. If your plan is to maybe possibly buy $100 a week, you're not going to buy $100 a week, let's be honest. Set yourself a plan and stick to it until you decide to change your plan later, and then stick to that new plan. Here's the problem. People buy crypto without a plan, just hoping for infinite returns. Then they see their portfolio down 15% one morning. These people are much more likely to panic and sell right at the worst time, right here. So set a goal and a plan, actually write it down, and you will be a better investor instantly.
For $25, what's it called when you spread your crypto buys over regular intervals?
Dollar cost averaging.
Ding, ding, ding. $25 bonus question. Where can you find additional content, buy alerts, and free coaching every day?
On the Patreon.
Ding, ding, ding.
You have a plan set up, thank God. But now what do you trade? You're browsing around and you see Dogecoin is only at 13 cents, but Chainlink is at $14. So Doge is way cheaper, right? This is a common mistake. Price doesn't matter. Market cap matters. Even though Doge's price per coin is far lower, we can see the entire market cap is actually 3 times larger than Chainlink's. New projects, especially meme coins, will often have billions or trillions of tokens in their supply in order to make people feel like they're getting in on the ground floor when they're actually not. Let's see if Dan knows the difference.
For $50, what's the difference between price and market cap?
Price is the current price of whatever asset we're talking about. Market cap is the pool of all the money combined.
That's pretty...
You know what I mean?
Do you want to expand on that?
Not really, because you already were about to say that's pretty good.
That's pretty good.
You're sitting there scrolling down to the 10th page of CoinMarketCap, and you find a crypto with a $500,000 market cap. Then you look over at Bitcoin and you see $800 billion. So could you 1.6 million times your money? In theory, yes, but no. Almost every single coin past the top 100 or so will come and go at some point. But you might be thinking, Shiba blew up, Dogecoin blew up. What if I choose the next one that does the same? And you could, but this is very unlikely. We need to be realistic. We need to consider what's called the survivorship bias. Basically, we hear about projects that blow up because they blow up. So it seems like there's constantly projects blowing up. However, in reality, we just don't hear about the 10,000 projects that didn't go to the moon. Sure, there is a place in a portfolio for moonshot bets, but that should be a very, very small percentage.
For $75 to charity, how much money was lost in crypto scam rug pulls last year? A, B, C, or D? A, 2.8 billion, B, 505 billion, C, 200 million, D, $7.
I have no idea, so I'm going to guess and say B.
That's wrong. It was A. Sorry, charity.
And you don't have to just worry about scammers taking your money, because you can completely mess things up for yourself. Crypto transactions are designed to be permanent and irreversible. This is so that no one has control over an entire network. If someone had the ability to reverse transactions, this would defeat the whole purpose of decentralization. But this has an unfortunate consequence. If you send crypto to the wrong address, it may be gone forever. If you're sending a large amount, it's always best to do a test transaction first, or you can avoid mistakes by only scanning QR codes. When copying and pasting wallet addresses, or even worse, writing them down manually, mistakes happen. Always double and triple check your wallet addresses.
$125 to charity if you get this right, but there's a twist. If you get this wrong, for the rest of the questions, you have to stand in a squat on this chair.
I'll get it right.
How many digits are in an Ethereum address? A, 24, B, 36, C, 42, D, 7.
36.
Squat.
You don't squat with your feet this close together.
It's called a sissy squat.
All right, can we get going?
Let's get going.
Unfortunately, incorrect wallet addresses aren't the only way you can become your own worst enemy in crypto. When it comes to the stock market, buying and selling is a bad idea because it quickly accumulates your tax obligations, which can really eat into your profits. With crypto, it's an even worse idea. Not only will you have that hefty tax bill, but you'll also pay a ton in fees, which can make a huge difference. Let's say you invested $100 and it jumped up 30% to $130 where you sold. Uncle Sam gives you the thumbs up, but that quickly turns into a pay up because you have to pay short-term capital gains tax on that $30 in profit you made, which would likely be around 20%, plus a couple dollars in transaction fees, so your $30 just turned into $22, and that's just one trade. Let's say you made a few good trades, and you're feeling good about your skills. You decide to try out leverage. Now, leverage is neither good nor bad. It's just a powerful tool, a very powerful tool in investing. This is where you borrow money to increase the exposure of an investment, and tons of investors have fallen into this trap before understanding the true consequences of leverage.
For $175, you buy $100 in Bitcoin at 2x leverage. The price of Bitcoin goes down 10%. How much money did you lose?
I don't know. I can't focus. $1,300 probably.
No.
Now, this might seem common sense to some, but you wouldn't believe how often people get scammed by it. Fake crypto account scammers. You've probably seen comments like this, or like this. Replying to those will usually lead you down some kind of rabbit hole WhatsApp scam. Don't do it. They even do this on Instagram. Check this out. Only the top account is me. The rest are all scammers. And if you want, you can go follow me there since Instagram doesn't feel like verifying me. You wouldn't believe how successful these scammers are.
For $190 to charity and a brand new Ledger Nano for you, the question is, when I tracked down a crypto scammer posing as me, how much money did I find in their wallet? A, 200,000, B, 2 million, C, 1 million, D, $7.
Probably $7.
That's wrong. 2 million. Here's your consolation prize.
Was I right?
No.
You suck.
But what if I told you even fake scam accounts aren't the only issue? Real influencer accounts can lose you a whole lot of money. Crypto is getting more and more popular, but it's still largely unregulated. For example, with stocks, it's very illegal to promote them without a massive disclosure. With crypto, there's a bit of a gray area. I mean, not too long ago, Kim Kardashian, who has 250 million followers, promoted Ethereum Max on her story. No relation. Which hasn't exactly performed so well over the last couple of months. This isn't necessarily a scam coin, but you get the picture. Everyone from gamers to streamers to adult stars have dabbled in questionable financial advice, draining the pockets of their audience. The moral of the story is, no matter who tells you what, always do your own research. Plus, doing your own research gives you the confidence in your investments because you know why you're buying, not just because someone told you to.
Just to ask the question.
You're doing great. For $200, what is the term for the recovery or backup phrase of a crypto wallet?
Seed phrase.
Ding, ding, ding. How do you feel?
Can I stand?
Yes.
I feel good. I don't feel that good.
Thanks to Dan, we racked up $465 in donations to the Organization for Autism Research, but 465 seems like a random number, so let's just go ahead and round that up to 500. From here, I recommend checking out this video where I take investment advice from robot Warren Buffett. I'd like to thank you so much for watching. I'm Max Maher, and I hope you have a profitable day.